What's up, guys? JJ Fade 23 here. I'm going to do a recap of earnings trade on Royal Caribbean today. All right, guys, as you guys can see, Royal Caribbean's been running up really strong ever since pretty much the COVID meltdown. Came back up, made a double bottom, and now it's going back up. Strong uptrend. So, what do I see today, guys? I know we have a big gap up from 237 to about 246 on earnings beat and raised guidance, strong outlook. Okay, so now, guys, as you can see, if you put on the weekly chart, look what's happening here. We're uptrending on the weekly EMAs. Look, up, came back to the 50, back to the 21, back to the 21, back to the 50, flagging up the 8. And now we've come back to the close to the 21. A lot of times, guys, it could be a kind of a clue when you have a stock that comes down close to the weekly 21 or any EMA and then starts to push off it. What happens is eventually the strong move up is going to make this EMA look like this. It's going to make this EMA look like it was touching it eventually because the strong move up. And then it's going to look back in time and you go, oh, look at it, touched it here, but it didn't actually touch it there. It pulled it up to it once it started making a strong move higher. So, we're clearly in an uptrend, all right? We clearly have a flag close to the weekly 21 right here. A pull and a flag. And on the daily chart, we also have another type flaggy looking thing here, right? Not a perfect looking flag, but an upper trend line here and a flag. So, today. Now, one thing to take note of. If we gapped up over this resistance, I would have had a different setup. If we gapped up over this resistance, I made a video about this not that long ago. I would have been looking for a dip into that resistance and reclaim for a bottom tail daily and then back through the open price for the long. Today, I look at the chart and I say, okay, Royal Caribbean's gapping up on earnings, plus has good outlook. That could mean have some legs. Plus, we're really close to all-time highs. But we opened just below this 250, which is a major recent pivot and also a big $0.50 major psych level. And above that, we had 260. So, at the open, pre-market data off. Oops, sorry. I don't want to long it. My plan was, guys, at the open, we're still below 250. All right? So, I don't want to long it in case it's going to pop up into the pre-market high, into 250, and just reject and dump back down because I can't see the future. So, my plan was, I know this thing could run for days because it's earnings, so I don't need to jump in first right off the open. I can make sure it confirms first. I want to make sure it breaks over 250 and breaks over the pre-market high. And then I look for my setup. So what happens? At the open, if you notice, if you have a smaller time frame chart too, if you're looking at a smaller time frame, look at this. Pops up to 250, slams back down. You might have stopped out if you saw that, if you were watching it real quick. Say even on the 5-minute chart, if you took it long, it hits 50, starts rejecting, you probably stop out. So that's why I wanted to wait to get over that level. Plus, I don't use anything lower than 5 minutes, sometimes 3 minutes, but never less than that. So what happens here? We get the open comes, we curl off the 5-minute EMAs, boom. We break over the 250 level, okay? Now, we break over the pre-market high. Now, what I said to the room was, if this pulls back, it holds the pre-market high or this 250 level and wicks off it, I'm going to go long. So what happened? It came back down, comes down, wicks off this. As soon as it reclaims, right here, you guys, it wicks off this level. As soon as I see it start to bounce off 250, I take it long. Now, on this kind of setup, because obviously my big plan is to scale, is have it for a couple days. But when I get tight risk like this, I take some off into lower high position right here. So basically it wicks down, comes up, buy at 251, or right around 251, 251.50, something like that. I sold some after a couple dollars, sold a little more into the highs, sold a little more up here, and then I wait for the end of the day to sell up here because near the end of the day, and now I just have like quarter left for a swing. And for all the after the fact Johnnies, I know people like to talk shit about how it's easy after, right? Pre-market high, 5-minute EMAs. I don't have the 5-minute EMAs on this chart, but the 5-minute 8 is right here. So we got a strong move up, flag off the 8. It wicks off 250, long it. Sell some. Now I'm out 3/4 at 270, and then I'm holding the rest for. holding the rest for a swing, right? So the point is, guys, when you see, you want to have your setups, you guys, once it goes over, once we broke over this 250, right? I really shouldn't have sold so fast. Some of them, because I should have had my first target be here, right? My first target should have been that next resistance level, right? So I basically shouldn't have sold any into this push. I should have let it try to break out, sold half right here, and then quarter, and then, held the rest. But anyways, the point is not how you scale out. The point is the setup of how you get in, right? So once you have your levels, you're just looking for a trigger candle. Look at this candle right here. This candle is perfect. It comes down, wicks right off it, closes right there long. Just a beautiful, beautiful trigger candle. And if you're using other indicators too, like I don't really use these that much. I use them sometimes for swings, right? But look, the bearish price action just goes bullish, just turns bullish when this starts wicking off right here. And also the MACD crosses over right here, and it's just starting, guys, you'll notice when the MACD crosses over, it can go for a little while. When it crosses down, it can go for a little while. When it crosses up, it can go for a little while. So it's just crossing up right here when I'm taking this flag setup right here. And so you can have a good, decent amount of bullish bars before it starts to go down like that, right? Over here, look, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Over here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So if I'm buying it right here in the very small part of this bullish turnover from bearish to bullish, I can expect maybe 10, 11 candles of bullishness, right? So I really should have held that a little longer, the very opening sells. But, sometimes the reason why I didn't hold that for as long as I normally do is because even though we had the 5-minute EMAs and the nice setup, this really, to me, when this lifted up and fell back down right here, this is also a fake breakout of the pre-market high. So I was a little like, we did reclaim it quickly, so it wasn't really a fake breakout. But, when you're watching these live in action, sometimes, my goal is to get 2 to 3 out at the first trade, and then so on and so on. Sometimes I hold longer for planned swings, but, when I'm buying it at 250, 150, risking $1 or something, or even like, I think it was like, hold on, let me look at my actual entry. Actual entry was, 250, 150. So I was risking about $1.50, right? So 53 would be 54.50. So, I took some off at 2R and then took some off up here, which was a lot more than 2R, because if you figure $1.50, right? 53 is 1R, 2R, 3R, 4R, 4 or 5 R's, and then up here, massive R's. Imagine I held that whole thing up to there, which normally I do. I don't know why I was a little... I think, what it was also today, guys, too? The market was dumping at first, so it was like, I really don't love when my long setups are aligned with SPY dumping. So SPY ended up recovering, right? SPY recovered and bounced nice, but at the time, when I was looking along this, SPY had a big dump and it was bouncing off the lows, but still, I wasn't sure if it was going to, if it was going to just dump again, bounce and dump again, or what. So, if the SPY was gapping up or going sideways and trending up slowly, I would have been all about this, holding this longer. But SPY was flushing hard off the open, so I was like, I'm still going to take this because it has earnings, and I do believe earnings power can overpower exactly what SPY's doing sometimes. If you have really good earnings, SPY could be going down, and it's not going to affect the, it's not going to affect the trade. It won't be as good if everything's going up. Like once SPY started bouncing over here, now look at this. All right, now SPY is going up and this is going up. That's great. But so that's basically the trade there. So we'll see how this works out. But guys, when you have a daily breakout like this could have legs. It could pop up here. It could have continuation tomorrow. It might flag for a day or two, then go higher. But usually when you get a breakout like this on earnings, you could definitely... you could definitely run for some days, if you look at the last earnings, you gapped up, flag, and look how much it ran, right? So, that's where, actually, that wasn't even earnings, was it? No. A little, close, but shortly after. So, I mean, you've seen it a million times. Stocks have earnings and then they run for days and weeks, years sometimes. You know, good earnings, they keep going. So, that was basically the one trade I took today. The other trade was on Docu-sign. I was a little salty about Docu-sign because I wanted to get in. Much lower, and I'll go over this trade with you. I had to chase it up a little. So Docu-sign, guys, I've made videos about these charts before. I put it on Twitter too. These are some of my favorite charts. When you have a strong company that's been run up, has a huge drop, accumulation bottom right here, mass accumulation for how long? My dog's a pain in the ass. Accumulation from look at this, months, almost over a year and a half accumulation, right? And then look what happens. We start to curl off. The weekly EMAs go up. We rip up. Guys, this could easily go back to this could go back to lower high position up here. It could easily go back to these pivots in the 50% fib right here. No problem. But now we popped up and we're flagging on the weekly EMAs and on the daily EMAs. See this? We're curling off of the daily EMAs. Bearish momentum is slowly going down and now turns bullish today. So over here we had this support. Multiple levels of support over here. So what I was looking for is once we broke a little out of this, I would have liked to buy it down here, but I wasn't watching it. Give me really low risk. I usually have the 10-minute EMAs with the pre-market data off, so it's not so sloppy. Now look, guys, we start to make more accumulation down here. It's kind of like a rounded bottom. Once we stop making a higher high right here, see this? We have lower high, higher low. We make a higher high. I should have bought it right here, risking off this point. And I had a chance to buy it right here again, but I missed it. But once I saw it start to push through here, and it made a new high right here, now it's definitely on my alert for today. And also, I put my fibs on from the lows. Comes back right almost to the 61 fib. I had an alert set for yesterday to buy it over here, but I missed it. So today, once I saw this open range break over this, I went long. I would have liked to get it down here with less risk, but today I went long right over this opening range breakout with my stop below that candle, and as you can see, it ripped a mile. So now, but I'm holding this. I don't care. I'm going to get stopped out on this. This can stop me out, or it can go back to here where I'm going to sell some and sell some here. Just like RBLX chart, just like TWLO chart, just like PayPal chart. These are all the same kind of charts that I love. So that's pretty much basically, when you see these charts, these weekly charts, guys, and they have a long accumulation bottom, they start to break out, especially on strong companies. I use Docu-sign every day. You know, everybody who in real estate uses it. I like Docu-sign, and if it's a good company that I like fundamental wise, plus this kind of chart, I will be all about it. And I'll just wait for it to start curling out of this accumulation base, and then I'll aim for 50 to 61, 78% fib, scale out into those. If this comes up to here, I'm not going to take profits. I want up here at least. I don't care. I plan this on being at 6 months to being up here somewhere. And they have earnings coming up in pretty soon, next month, I think. Yeah, so this will give it the power. Once they have another good earnings beat, boom, blast off. And I'll have so much of a cushion. By the time, it should be up here somewhere. By the time they have earnings, I can hold through earnings with no fear because I'll have enough cushion that in case it does dump, I won't take a big loss. I could just get stopped out even or something. So anyway, that's my plan. My food's here, so I'm going to cut this video short. Thank you, guys. I'm not a financial advisor, by the way. Peace.